And thank you very much for joining me here today. To start off, I want to talk to you about a bipartisan group of senators who's proposing a bill to overhaul immigration policies and tighten border security. And it seems like President Joe Biden also championed the proposal. Here's a look at that.
The city of Denver is overwhelmed by migrants, families housed in hotels, some living on the streets. Others doing whatever they can just to make some money.
We're not comfortable having a city where we have moms and kids sleeping on the streets in tents.
Denver is one of many established sanctuary cities across the country, providing a safe haven for migrants. But without additional federal resources, finding ways to support them is becoming more difficult.
We don't want people on the streets, but without resources, we don't have a choice.
It's a struggle many of these sanctuary cities face as more migrants arrive at the U.S.-Mexico border every day. On Monday alone, U.S. border authorities say they encountered around 4,800 migrants trying to enter the U.S. there.
I think there's been a real lack of leadership on this.
Some senators have proposed a bill that would give the Department of Homeland Security the authority to shut the border if migrant crossings rise above 5,000 per day within a given week, or 8,500 in a single day. The bill would also allow immigration services to decide asylum cases at the border.
The reforms in this bill are essential for making our border more orderly, more humane, and more secure.
Passing the legislation may prove difficult, as many Republicans worry it doesn't go far enough, and some think leaving current immigration policies in place could help them win key races in the 2024 election.
All right, now on to U.S. markets. Stocks closed slightly higher on Tuesday as investors scrutinized a mixed bag of earnings at big U.S. companies. And they're digesting comments from Federal Reserve policymakers for potential clues about its first planned interest rate cut. Here's a recap of markets.
Wall Street's main indexes closed slightly higher on Tuesday as investors digested a mixed bag of earnings and remarks from Federal Reserve policymakers. The Dow added nearly 0.4%, the S&P 500 gained 0.2%, and the Nasdaq ticked up marginally. In public comments Tuesday, Minneapolis Fed President Neel Kashkari said the central bank is, quote, not done yet with inflation, and Cleveland Fed President Loretta Mester said she was not ready to suggest the timing of rate cuts.
It's deja vu all over again.
The famous Yogi Berra quote is the way Sean O'Hara, president of Pacer ETF's distributors, described how the Fed continues to drive the market.
We're still watching inflation. We're still watching what the Fed is going to do. Are they going to pivot? Are they going to cut? Are they going to cut 6 times, 4 times, 2 times? When are earnings going to continue to remain strong? So I think we're sort of stuck in this same loop, if you will, of information that we don't have enough solid answers for to be able to figure out direction going forward.
In earnings news, shares of Snap, which closed up 4%, plunged 30% after the bell, after the Snapchat owner missed quarterly revenue targets as it struggles for ad dollars. Shares of GE Healthcare Technologies gained more than 11.5% after the medical tech firm posted better than expected fourth quarter earnings, driving the S&P 500 healthcare sector to an all-time high. But the materials sector was the biggest gainer, thanks to DuPont, whose shares gained nearly 7.5% after the chemicals firm beat fourth quarter profit estimates, announced a $1 billion share repurchase program, and hiked its dividend.
Now, a new survey is revealing that inflation and the U.S. presidential election will be the top drivers of global markets this year. Traders told J.P. Morgan that they see inflation as having the biggest impact on markets. They're also preparing for more volatility ahead of the likely rematch between former President Trump and President Biden in November. The survey also found that investors are increasingly valuing consistent access to liquidity. Of course, this is as electronic trading grows. And plus, recession fears, which came last year, was pushed down to the list since economic growth beat expectations. Now, JP Morgan is about to embark on an aggressive expansion. The bank announced that it's going to open more than 500 branches in the U.S. over the next 3 years. The company plans to broaden its footprint in underrepresented areas. Now, new branches will be breaking ground in Boston, Charlotte, the areas surrounding Washington, D.C., Minneapolis, and Philadelphia. JP Morgan also plans to renovate nearly 1,700 existing branches and will be hiring 3,500 employees. Now, the expansion comes as other lenders seems like have reduced their locations. But JP Morgan made a record annual profit last year, and it was lifted by resilient consumers and more income from interest payments from raised borrowing costs. Meanwhile, Fox, Walt Disney, and Warner Bros. Discovery said on Tuesday they're going to launch a sports streaming service later this autumn to capture younger viewers who are not tuned into television. Here's what you need to know.
Fox, Walt Disney, and Warner Brothers are teaming up to stream sports this fall. The companies say the yet-to-be-named service they plan to launch will combine all of their various professional and college sports rights. They also say it will try to target younger viewers, increasingly opting out of cable in favor of what's online. Media analysts say there are around 40 million households in the U.S. that pay for high-speed internet access but don't subscribe to pay TV. The launch of the sports service signals a recognition there's a large market for sports outside of traditional TV. A Disney executive called the plan, quote, a smart defensive move with potentially huge upside. The service will be jointly owned by the three media companies and provides them another way to monetize increasingly costly rights for sports coverage. They say it will offer an inclusive package, which includes major TV sports channels, including ESPN and FS1, as well as video to stream, like live sports. Subscribers would also have the option of subscribing as part of a bundle from other streaming services like Disney Plus or Hulu. An all-sports digital offering is likely to appeal to Amazon, Apple, and Roku, which aggregate streaming video for millions of consumers.
And now a bit of China news. The country's largest chipmaker is set to start next-generation smartphone processors as it reports a fall in net profits. Revenue for Semiconductor Manufacturing International Corp rose to $1.6 billion in the fourth quarter. But the chipmaker missed analyst expectations and reported a 55% drop in profits. SMIC made international news for assisting Huawei to develop an advanced chip manufactured domestically in China. Now, the Financial Times is reporting that the top chipmaker has put together new semiconductor production lines in Shanghai to mass-produce chips designed by Huawei. Beijing has been investing heavily to create a self-reliant semiconductor supply chain, so we'll see what happens. Now, with AI tools rapidly advancing and capable of creating fake, realistic images, tech companies like Meta are setting up policies to protect its users. Meta announced that it's working to identify and tag any AI-generated images that were created by third-party tools shared on its platforms, which are Facebook, Instagram, and Threads. It already applies a similar tag to photos created with its AI generator tool. Meta is preparing for the 2024 election season and trying to stop the spread of misinformation that could mislead voters. The AI-generated image labels will be rolled out in the coming months in multiple languages. On to Ford. The company's shares jumped on Tuesday after the automaker said it's going to return more cash to shareholders. That's starting with an extra 18 cents per share dividend in the first quarter. And it's joining General Motors in giving investors more of the cash spinning from North American combustion trucks. Here's the report.
Ford shares jumped Tuesday, gaining over 6% in after-hours trade. The surge came after the automaker said it would return a big pile of money to investors. That starts with an 18 cents per share dividend in the first quarter. Ford is raking in cash from trucks and SUVs. It now expects a pre-tax profit of up to $12 billion for this year, after earning just over $10 billion last year. It's a very different story on electric vehicles. The firm says it will now slow investment in EVs amid soft demand and a price war sparked by Tesla. Ford says it will only launch a new generation of battery-powered cars when it is sure they can be profitable. Right now, its Model E division is losing more than $47,000 on every car it produces. Chief Executive Jim Farley says the firm will instead invest more in hybrids, saying they enjoy much higher profit margins. He predicts sales of such vehicles could jump 40% next year. Now, Ford's move to please investors matches a similar pledge by General Motors last week. It gave a bullish outlook for 2024 and said shareholders would get more of the cash generated by sales of trucks and SUVs.
South Korean EV sales have begun to drop for the first time in years, and fears of lithium battery fires have been listed among the biggest issues. Lithium battery fires have slowed the country's industry ever since a series of 28 consecutive battery fires occurred in South Korea between 2017 and 2019. NTD's Sean Marshall has more.
Risk of fire is the biggest worry among Korean electric vehicle owners. According to a survey conducted by the Korean Transportation Safety Authority, EV sales fell for the first time in 6 years in 2023, with fire risk cited as the main safety concern. Their biggest safety concern is a fire caused by a car crash or during charging. An early factor to cause concerns was a serious fire in late 2022 at a data center which engulfed batteries used in backup power systems. It knocked out a lot of important digital services for days, giving problems to banking, ride-sharing, and online delivery services. Viral videos of fire death in accidents and fires spreading to other vehicles have added to the public's concerns. Blogs about how to open a car door in case of an EV fire are still popular on Korean websites. And if you happen to have a Tesla, their website shows how to manually open the electronic doors with a hidden lever when there's no power. Sean Marshall, NTD News.
And a door panel that flew off a Boeing 737 MAX 9 jet mid-flight on January 5th appeared to be missing 4 key bolts. This is according to a preliminary report from the U.S. National Transportation Safety Board. And it provided the first official look into how the frightening mishap took shape. Take a look at this.
A door panel that flew off a Boeing 737 MAX 9 jet mid-flight on January 5th appeared to be missing 4 key bolts. That's according to this initial report released Tuesday by the National Transportation Safety Board investigating the incident, which contains photos showing where the bolts should have been. Investigators said the bolts were removed to fix damage done to the door panel in the manufacturing process, and they are trying to determine why they weren't reinstalled. The door panel was manufactured by Spirit Aerosystems and delivered to Boeing. Lawmakers and the flying public are desperate for answers to what caused the panel to rip off a brand new Alaska Airlines operated jet in what has turned into a full-blown safety and reputational crisis for Boeing. The new head of the U.S. Federal Aviation Administration, Michael Whitaker, told Congress Tuesday that his agency is conducting an audit of 737 MAX manufacturing, which is looking at all elements of production at Boeing and fuselage production at its supplier, Spirit.
The events of January 5th, it really created 2 issues for us. One, what's wrong with this airplane? But 2, what's going on with the production at Boeing? And there have been issues in the past, and they don't seem to be getting resolved. So we feel like we need to have a heightened level of oversight to really get after that.
The FAA grounded 171 of the Boeing 737 MAX 9 planes for inspections after the incident, most of them operated by U.S. carriers United Airlines and Alaska Airlines. Those planes were cleared to return to service in late January. Boeing President and CEO Dave Calhoun said on Tuesday, quote, "Whatever final conclusions are reached, Boeing is accountable for what happened. An event like this must not happen on an airplane that leaves our factory." Shares of Boeing rose about 1% Tuesday, but have dropped about 15% since this accident.
And now let's talk about credit. The U.S. has reached record credit card debt as Americans deal with inflation, increased interest rates, and the end of pandemic-era relief programs. Now, the latest data from the New York Federal Reserve shows Americans held more than $1 trillion on their credit cards in the last quarter of the year. And it seems like people are struggling to pay it back. The same report found delinquencies are up. In December, more than 3% of outstanding debt was in some stage of delinquency. Experts are recommending consolidating loans when possible and asking credit card companies for a lower rate. And if you can, pay off higher interest debt first, or use the snowball approach, which is pay off small debts first to boost morale. All right, now on to Hollywood. When stars returned to the red carpet in early January after 2 bruising strikes to celebrate the success of Oppenheimer and Succession, one existential threat above all was on everyone's mind. Hollywood is shrinking. Here's more.
Is Hollywood shrinking? After 2 bruising strikes, that's been the question on everyone's minds as stars make their way back to the red carpet. From fewer original series and movies,
I'm gonna find you and take what little you have,
to more scrutiny on production budgets.
I seek outings and adventures.
Entertainment executives, agents, and bankers Reuters spoke to all say the era of peak TV is over.
I want to kill the opposition. Cut their throats.
One of them even called it the Great Contraction. So what does that mean for Hollywood? There are signs of the contraction everywhere. It'll be prominent when Walt Disney, Warner Bros. Discovery, and Fox report quarterly results this month. Analysts estimate broadcast and cable TV ads will be down 7% from last year. Next year doesn't look much better, with ad revenue forecasted to fall another 7%. The contraction is also the backdrop for media merger chatter, most recently between Paramount and Skydance Media CEO David Ellison, whose studio produced Top Gun: Maverick. Streaming services were supposed to carry the industry into the future, but are struggling to reach profitability after years of profligate spending. Most streaming services are charging more while delivering less new content. The overall number of scripted series is expected to shrink dramatically from the pinnacle of 633 shows released in 2022.
I don't know what the future holds, so...
Executives say the industry is slowing down. It's taking longer to greenlight shows.
Fate is not decided up there, but down here.
And shows that fail to grab an audience are being canceled quicker, and seasons are featuring fewer episodes. One senior television agent calls it the New World Order. The movie business is having its own existential crisis, as once reliable formats have fallen flat at the box office. Big-budget superhero movies have been falling short of expectations. So insiders say studios are shifting gears and focusing instead on fewer but more ambitious endeavors, hoping to deliver Oppenheimer and Barbie-sized cultural and box office impact.
I find the world a bitter and complicated place.
According to analyst T.D. Cohen, people are streaming everything except the biggest, loudest films, so the outlook for a sustained recovery is questionable. That will further constrain cinemas, as insiders warn there may be too few films released to justify the 39,000 screens in the U.S. U.S. box office sales are expected to be $8 billion in 2024, down a third from 2019.
Now, even with tightening credit standards, loan demand is expected to actually jump next year. According to a new survey by the Federal Reserve, it found that U.S. banks are anticipating an increased demand for loans as interest rates fall. This comes as banks are planning to tighten standards on commercial real estate, credit card, and auto loans this year. Now, part of the reason they say is a deterioration in collateral values and less favorable economic outlook. Now, of course, Super Bowl week is underway with a sensory overload spectacle at the Las Vegas Allegiant Stadium and a sprinkling of a music superstar. Take a look at this.
Super Bowl week opened on Monday night with a spectacle at the Las Vegas Allegiant Stadium. But as anticipation builds for the United States' biggest sporting party, the name on everyone's lips isn't even a football player. It's one of their girlfriends, pop superstar Taylor Swift, whose clout could make this the most watched Super Bowl show ever. Performers flooded the infield while more than 23,000 fans filled the stands, waving flags and placards. The defending Kansas City Chiefs take on the San Francisco 49ers for the cherished Vince Lombardi trophy on Sunday. As boos rained down from the stands from 49ers fans, chief tight end Travis Kelce took questions from reporters. Many of the questions were focused on Kelce's partner Swift, who made history at the Grammys when she won her 4th Album of the Year award.
She's unbelievable. She's rewriting the history books herself. I told her I'll have to hold up my end of the bargain and come home with some hardware too.
During his annual State of Football address earlier on Monday, National Football League Commissioner Roger Goodell called the Taylor Swift effect a positive for the league.
Obviously, it creates a buzz. It creates another group of young fans, particularly young women.
According to Apex Marketing Group, the Swift-Kelce love story has already brought millions of dollars of added brand value to the Chiefs and the NFL. It is still not known if Swift will attend Sunday's game, which falls between tour dates in Tokyo and Australia on the singer's Eras tour.
Now, a quick update on WeWork. The shared office space provider is exploring new bankruptcy loan options as it has hit a crossroad with its landlords. Several of WeWork's landlords are calling the company out for not paying as much as $33 million in January rent. WeWork's attorney said it saw more success in negotiating from the tactic. An attorney for creditors said there has been little progress in chats between WeWork and landlords. The company is now considering taking out a new loan to get through its bankruptcy case. UBS Bank said that it's going to restart share buybacks and find $3 billion more in cost savings from integrating Credit Suisse. This is as the bank outlined the next phase of its absorbing its fallen rival after underwhelming fourth quarter results. Here's more.
UBS wants to deepen cost savings as it integrates Credit Suisse. The Swiss bank now expects $13 billion in savings by the end of 2026, and half of it will come through job cuts. The lender had previously set a goal of more than $10 billion. UBS's takeover of Credit Suisse last March was the first ever merger of two global systemically important banks. It has since managed to avoid any major problems, and its share price has gone up some 50%. The bank declared the first phase of the integration complete on Tuesday, but there's still a long way to go, with difficult stages ahead. Analysts gave its fourth quarter results a middling response. The cost of absorbing Credit Suisse led the world's biggest wealth manager to post a net loss of $279 million in the fourth quarter, slightly better than expected. Analysts did welcome a proposed 27% increase in its 2023 dividend. UBS also announced Tuesday it would restart share buybacks. The lender's stock price was down 3% by mid-afternoon.
And just a quick bit of gaming news. Nintendo raised its full-year Switch sales forecast to 15.5 million units, up from 15 million previously. This is as the company squeezed sales out of the aging console over the year-end shopping season. Take a look at this.
Nintendo raised its forecast for sales of its Switch console on Tuesday. It had previously seen full-year sales of 15 million, but has now put that up to 15.5 million units. That surprised some analysts, with the hybrid home portable Switch nearing its 8th year on the market. Expectations are rising that Nintendo will release new hardware this year to replace the aging console. The gaming company sold just over 13.7 million Switch units in the first 9 months of the financial year. That was down 8% on the same period a year earlier. But the life cycle of the Switch has been extended by a string of hits, like The Legend of Zelda Tears of the Kingdom, which launched last May. Super Mario Bros. Wonder also went on sale in October and has sold more than 10 million units. Nintendo reported a record net profit of about $2.75 billion for the April-December period. Company shares closed down 0.5% ahead of earnings, but have gained 14% year to date.
And that's all the stories for today. Thank you very much for watching. We'll see you soon.